wonderful. Welcome. I offer you the stage to have a wonderful chat.
Thank you so much, Chair. I'd like to greet everybody this morning. It's been such an exciting and very insightful conference, and I think the topics that have been discussed are very pertinent, and I think they're going to change the trajectory of the banking sector in South Africa as well as on the entire African continent. What do you think, Dirk?
Yeah, it's been a very exciting conference. Lots of new information being shared, right?
Right. And I think the topic for us this morning for our Fireside chat is mitigating risk with technology and seeing how we can prevent fraud in terms of the banking sector. Now, I've got quite a few statistics for us this morning in terms of the increase of fraud in terms of from a cybersecurity perspective. I mean, if you look in terms of the recent statistics, we've got the information regulator that is fining companies left, right, and center because of them having data breaches in their environment. And you can imagine this not only affects the professionals that are in those particular jobs, but it affects the brands of the companies. And then over and above, we had, for example, the POPI Act that is in place, GDPR, different acts that are in place to ensure that information security of the clients is secured. But still, we experience challenges from a point of data breaches. I mean, you look at ATMs, they are susceptible to hacking. Apparently 92% of ATMs are susceptible to hacking. And over and above, in South Africa in the past year, we had about 13,000 intrusions into online banking accounts. And so those are the numbers that we're dealing with. But I want to ask you, Dirk, based on your experience and what you guys do at SprintHive, how is AI going to be important in terms of fraud detection and improving security from a banking perspective?
Yeah, I think the role of AI is so broad. I mean, it is such a general tool that you can use it on almost every level. So we can use it from first-party fraud detection, third-party fraud detection, transactional fraud detection. It's useful in all of those areas. But I think the role of the AI is important. Like Johan said, it's an AI-enabled detection, not an AI-run detection. So the role that we see in what AI plays is in helping the humans focus on the right cases. So we're a small company. We only do identity and income verification, and we have 8 AI models that does fraud detection, from minute things like fonts and character spacing all the way to like document tamper detection. And so I think in a bank we will end up with hundreds of these things. But what the role of the AI is just to categorize and classify the data. So we bucket things into low risk, moderate risk, and high risk. Low risk, the humans don't need to get involved. High risk, we can sort of automatically decline, and those are rare. And the rest, we're telling the agents to focus on these cases, and we rank them in probabilistic order. And that way, the agents become so much more effective because they're only working on the important cases. The AI takes the easy jobs off the table for them, so that they're less busy, they have more time to look at a case, but they're also looking at the right cases. And I think that's the role in all of these aspects that AI should be playing. It should make the humans more effective.
I like that. AI should make the humans more effective. It's not necessarily replacing the humans, but is actually enhancing the capability of the humans.
Exactly.
And also when you look in terms of tiering from a cybersecurity perspective, you've got to look from your network to do vulnerability as well as penetration testing. Yes. And then I like it when you said you go deeper, because from our side at the Zora group, we look at vulnerability and penetration testing, and then also looking at the transactions. But I see you and I complementing each other because you go even also to the transactional level. How important is it to tier how we actually manage security risk? Because you mentioned different layers. Why is it that important that we are able to tier the level of security risk?
Yeah, I mean, security in layers is an industry standard already in networking and other like computer sciencey type things.
Right.
And that should translate into business, where if one layer fails, there should be another layer of protection. The first bank I worked at had a security policy actually called Fort Knox. And their security policy was, we have this super strong wall on the outside with all the gates and checks and balances. But once you're in, right? And then you can go around as much as you like. And these days, It's more like every door is locked and you have security access. I mean, this is what we do physically as well. And we need to stop, you need to do intrusion detection and all of these things on all the layers. So for instance, in our income verification, we do document tampering. Is this a fraudulent document? But we also have to do a money muling detection. So is it a real bank account, but the person isn't really, there's not real income in it. So there's all these layers of checks and balances. And often you'll find that, if somebody can circumvent one, they won't circumvent the next.
I like that.
Yeah.
Because the thing is, what is important is that the data must be protected.
Yes.
And I think when we started with innovation around cybersecurity, we focused a lot on encryption, encryption of data. But still, the hackers became more intuitive and managed to penetrate the information. A technology that I've seen that is taking up storm is tokenization of the data. That even when the hackers come, they get junk information.
Yeah.
What other innovation technologies do you think can be applied to secure company data as well as customer data?
Well, the one thing that excites me a lot is zero-knowledge proofs. So right now, if you think about every time you deal with any kind of financial services, you bring a copy of your ID, 3 months bank statements, and proof of address. It would be nice if the banks that have all that data can provide proof without providing my data. When I give someone my bank statement, you should see what we can glean from someone's bank statements. We know where you live, we know what you like, we know your propensity to take a loan. Because your bank statement has your whole financial life in it, right?
Right.
And I have to share that with a retail credit provider. Wouldn't it be better if the retail credit provider says, Dirk Leroux claims to earn 15,000 Rand, does he earn at least that much? And the bank can say, yes, that much or more. So, the bank stands for proof, but doesn't share my data. That would be a very exciting.
I actually want to engage our audience with this fireside chat, and just to check, what measures have you put in place in your organization to mitigate fraud prevention? And maybe from our conversation, we can also provide a solution. Anybody? In terms of mitigating fraud in your organization and environment? Oh, I've got a hand here.
All right, thank you. My name is Tatenda. I'm from AFC Commercial Bank in Zimbabwe, and I'm the head of digital transformation. So we developed our online banking system, and I think what's critical is multi-factor authentication, especially when you're onboarding a client and when they get to do the transactions. So it's just beyond your password. You also have to have an OTP, extra layers of security. I think that is what we have done.
Thank you very much. And we've got another one.
Morning. Well, from Nedbank's side, we've put a lot of focus in terms of our clients' fraud preventative measures. We have a form of a singular ID. So when we were talking about peripheral IDs across the entire Africanized market, we already have a collective ecosystem ID that the client sits behind. And while they sit behind that stack, that net ID is your entry point. So we have obviously multi-factor authentication, step-ups, but we also have fallback step-ups as well. So if a step-up fails or a step-up is picked up on a pinpoint that this is an irregular, we need to move them into a second or third level of authentication as well. I think what the primary drive is to solve in the next, immediate future is how do we deal with obviously social engineering. Because even if you look at IA bots, even if we look at, keystroke bots, all these wonderful things that come in, if a client is socially engineered, and a good 70% of all fraud that lands on the table is social engineering fraud, it's very hard to pick up those detections. So I would actually be quite interested from the panel itself on how do you deal social engineered based fraud, because hacking fraud, commercial fraud, that is going to get less and less, and identity theft is actually what is actually causing most of the money movement out for clients, especially the clients in the lower LSMs, the more vulnerable clients, the clients that are not tech savvy. We have the tabletop camera even on facial biometrics now. Even if you use native biometrics sitting on the actual Droid or iOS devices, they can be bypassed through campaignings outside spas to win a prize. So I think, and we laugh about it, but it's a sad reality. These are how people are losing their life savings in some instances, right? So even though we can prevent and stop as much of the money movement out as we can on second, third, fourth factor authentications, I do think that the industry needs to deal the social engineering fraud as a priority right now.
I love it. Do you want to take it on, Dirk?
Yeah. So from the first one, we started off with security of something you know. We had a PIN or a password. And then we went to something you know and something you have. So you had to have a token, a YubiKey, or your cell phone, or something like that. And now, like NetBank, we're going to something you know, something you have, and something you are. You know, your fingerprint or your facial biometrics. So, and those are the multi-factor authentication keeps going up in the stack to multiple levels. I think the biggest trend we see, and I'm going to steal a bit into Tuso's talk, is this not social engineering, but the collusion of agents. So wherever the humans are in the process, the fraudsters are actually attacking those and you know, bribing people and trying to get collusion. And then definitely also taking destitute people and buying their identity. So going to someone who doesn't have any money and saying, I'm going to use your identity, put money in your account, and effectively create a fake persona out of that person. When we developed a new feature in our identity verification that we wanted to test, we went down to the Mug and Bean, actually the Vita Cafe in our building, and we said to everybody, if you don't mind us scanning your ID and your face, we'll pay for your coffee. And we expected to get like 2 that day, and not a single person declined. It's the most bizarre thing, and you know, at price of a cup of coffee, you would think it would be thousands of rands. Funny enough, when we offered them money, they declined, but when we offered to pay for coffee, people said yes. It felt more like a transaction, I think, when it's money. And yeah, so the social engineering is still probably the biggest, and I think biometrics, because it's easy to coerce someone to get, you know, their password, and it's easier to sort of trick someone to get their device, to actually get them to participate in a if you have good liveness detection, that I think sort of needs their participation. So then they are sort of liable. They were not coerced or tricked into it. I mean, if your replay attacks and all those detections are good enough, the likelihood of tricking someone into doing a biometric verification is probably low. Yeah.
Liability. Okay. So, you know, in terms of liability, and I suppose it depends on where we want to stand as financial institutes. Are we there to do good inside the communities? And I think sometimes we hide a little bit behind, well, you gave up your credentials, and there's only so much we can do, and we get that. I mean, if you literally hand over your bank card with your PIN, expect your ATM to be drawn out, right?
Yeah.
But you know, we do need to get into that space where, and it might just be an education play,
Right.
but we need to get smarter on how we educate, because let's face it, these syndicates are always 7 steps ahead of us on what we need to do. So I don't like hiding behind liabilities, you know, and say, well, we're only going to pay you out 30% because you had your photo taken and things like this. We have to find a way to protect our clients, especially our vulnerable clients. You know, the clients that have got all their SASSA grant money is sitting in their account, the clients that are saving for, you know, inside of a, okay, well, stock files not so much because you need multi-party authentications. But I think you're getting the gist of it. You know, there's something else that we need to do as financial organizations, other than just, you know, factor authentication, because what used to be called secretive is no longer secretive.
Right.
ID numbers are not secretive anymore. You know, that stuff doesn't work anymore.
Yeah, because I think I like the point when you mentioned with regard to social engineering, because we are juxtaposing from an era whereby it was the traditional banking, you know, whereby people would have to go into a bank, open a bank account, but we've got MNOs right now that are providing financial services. We've got neobanks, and there's a whole plethora of ways people are transacting. And on the continent, we've got about 350 million people who are unbanked. And as you were saying, to the point of educating, how do we get those people on board? And then so that they're not susceptible with whether somebody takes their SIM card and does a SIM swap and then takes their information. What other things can we put in place? Because the way of banking is changing, and the world as we know it is also changing. And how do we tap into that untapped market and make sure that people can come into the banking sector, but then also have a comfort, even if somebody doesn't even have a smartphone, but how can they have that comfort that they can be participant in the banking sector and their information secured?
Yeah, I think education is an important thing, and I think all the banks are spending a lot of money on it, but it is sort of sorry to say, but a typical bank thing to say, you must change to fit me. Shouldn't the bank change to fit the customer? Why is OZO so prevalent? Why do people give their username and password when they're buying something off Takealot? Because it's so convenient and it's seamless and it's easy. If they had open banking APIs and mechanisms to allow for it, I know you guys, Nedbank does have an open banking API, but wouldn't that be a better way to give the customer, they want to transact that smoothly. Shouldn't we give them a way that does that does not entail sharing your username and password? I think things like open banking API, the new payment systems, PaySharp and these things, those are the right measures to make it convenient so that people don't circumvent security for convenience. People will take the path of least resistance every time, I think.
I want to actually pose a question to the MNOs in this room. In terms of their mobile transactions, there's a question, okay.
In support of what was said a moment ago about IDs no longer being that private and personal, neither is my address. Yet every time, if the bank phones me or my private bank or whatever, and they say, I just need to confirm I'm speaking to the right person, they ask me, my ID number. Well, that's nuts. Then they ask me, what's your address? Why not ask me, what was my first dog's name? Or something that they're less likely to know. What's my pet name for my wife? A lot of this other stuff, they just go and rummage through my rubbish, go and pick up my mailbox, intercede my email address. But they're not going to know my pet name for my wife very easily. And I know sometimes the complex, sometimes a complex problem can have quite a simple solution.
Thank you very much. And I think it's noted to say, what are those things that are not so obvious that can secure the customer data? And again, as I wanted to complete the question to say, with regard to the convergence of the financial services, what are the MNOs doing? I think we have some in the room, as well as neobanks. What are measures that you are putting in place to ensure data security of the clients? Any MNO in the room who wants to take that on? I'm looking at the table.
Yeah, no, so obviously I think, morning all, we obviously looking at multiple different measures. I think it starts at the handset level. And I think, as Dirk says, that education is the biggest component. And I think we also on a drive just with completely educating our customers. But as I said yesterday, we're starting at device level. There's a lot of different applications to protect your phone at the device level. And what we're doing is part of our products, we're also looking to add those as almost like a value-added service. So when you buy a phone from us, we want to say add a 70 Rand every month or add a 70 Rand a year and you get Samsung Knox loaded onto your phone with a premium account. Then at the network layer, we're implementing multiple different security layers to ensure that at the network layer the data is protected. And then within the banking environment, so within our MoMo application, there's various different levels of security. The same that the banks are implementing, two-factor authentication, when a transaction is made, OTPs, all of those different things that's out there as best practice, we are applying it. So there's nothing different that we are doing to what everyone else is doing here.
Thank you so much.
But wouldn't it be very useful for Nedbank to know if they're sending an OTP to a customer, if there's been a recent SIM swap or a recent handset change or something? So
correct.
If the industry's,
that's what I said yesterday, is we actually starting to expose those APIs.
Oh, right.
When we deliver almost all of the OTPs for all of the banks, there's just probably one bank that's not doing it through us today, but we do firstly a number portability check to say, hey, the guy has ported his number. We do a SIM swap check. So there's a timestamp, was a SIM swap performed within the last couple of hours? If then we don't send the OTP to the handset.
Right.
And then we're starting now to expose it publicly to end. They can have information. Then you message.
Right.
I think I like that because it provides the conversation when we started to say there's different layers
Yes.
in terms of providing security and different levels of authentication. Just coming back to you, Dirk, with regard to, as we're almost going to wrap up our discussion, to say what are the key takeaways that we can give the people in the room with regard to enhancing security for their clients?
Well, I think if you're talking about from an AI perspective, I think it's always that data is key, and data, fresh data is key. So you've got to think about your short feedback loops and your long feedback loops. So if you think about something like money muling, where somebody is creating a fake bank account, if you detect high risk, you send it to an agent. If the agent says yes, it should be immediate feedback for the AI to learn whether the agent approved it or not. That's what we call the short feedback loop. And then the long feedback loop is you should go back 6 months later and say, hey, did that person pay? Would we actually collect on this, or is there an impairment here? If there is, then feed that back into the AI again. And when you design your AI solutions, you first start with getting the data and getting the feedback loops on the data before you even build your first model. Because fraudsters' behaviors will change. I mean, we're always building, measuring, and learning, and they're doing the same, and we're in this race to constantly adapt, who can adapt faster. So if you're not building your feedback loops from the beginning, then your models will be out of date super quick. So that's probably the...
Yeah, and I think what's also imperative is looking at the different ISO standards that are governing in terms of how we run, for example, a secure environment. On our side, when we're looking at building, for example, a SOC, which is a security operating center, that provides security from a network perspective, even also doing prevention and intrusion prevention. So it's very good that we are all looking at complying with the different regulations, but then also making sure that from an infrastructure perspective, we provide that different type of layer, even up to a transaction level, And I think with regard to the different AI tools, because there's a myriad of tools that we can implement that do, like, for example, psychology, the behaviors of the fraudsters, so that you're able to do predictive analytics from an AI point of view to determine the behavior of the fraudsters before they actually do an intrusion or an attack. So it's very important with regard to seeing how the different technologies are evolving with regard to providing data security, even on a granular level.
Yeah. And I think the other thing is to use probability, use machines to do probability. Risk is always probability and consequence. Humans are really good at working out consequence, but we're intuitively very bad at probability. And I always say the best example is nobody lets their kids play out on the street because what could happen seems so bad. But lots of people don't buckle up their kids. And the probability of your kids being in a car crash is much higher. And humans just intuitively doesn't get it. AI is amazing at working out probabilities.
Right.
It's really bad at working out consequences. Yeah. So that interplay, the banks and everybody should leverage that. Use the machine to work out the probability of something going wrong, but let the human deal with what's going to go wrong and what that will imply. And you can use that probability to escalate. Like, with Nedbank, I'm a Nedbank customer, so I know how their systems work. But if I go above a certain, if I do something anomalous, then I would be asked for a PIN. I hope soon I'll be asked for biometric verification since I've just onboarded. And then you have, based on probability, you can then escalate how much second factor or third factor you would need.
Right.
And you can, and the convenience factor stays the same, because if I always every morning buy a coffee, and then I don't need an OTP to buy my coffee, right? But if I all of a sudden, buying a coffee in New York, then it's like, oh, that's,
I guess the more things change, the more things remain the same. Because in the olden days, they would say the problem is not the system; it's between the keyboard and the chair. And I think it still persists even today, because humans are the ones. When somebody does phishing, they will send you an email. It's a human error for them to click, or different things. But still, between the chair and the keyboard, That's really where we need to find and develop mechanisms to provide security, but also to provide education to the users and as well as our clients. So if we have any questions to us as a panel before we wrap up this chat, we got one at the back.
And another one there.
And another one there, okay. It's at the back.
Okay.
Good morning, everyone. I just have a question, maybe broadly to the room. When it comes to cybercrimes, it tends to hinge mainly on two things: identity and money, of which all the stakeholders in this room are engaging on. So my question is, with the regulations that were put in place with the Cybercrime Act of 2020, whereby regulation was put in place in order to address the different financial cybercrimes, how has the regulation affected, whether positively or negatively, how the financial institutions deal with their clients being victims of breaches of their cyber identity? If there's any experience in the room where best practices can be shared. Thank you.
All right, I can take that. So what we've done as a company, we're looking at cyber insurance so that we are able to protect, because we provide cybersecurity service, cyber insurance, so that we are able, in the event of, we are able to work with the institution that we're working with so that the client is protected. But I think further measures are being taken, because as around the room it's been discussed that there's different layers of security that we're providing, and I think that is imperative because we are all on a chase. The hackers are getting advanced, and so are we. And as Dirk indicated earlier, it's a matter of who gets to outsmart the other first, you know. But as the technology is evolving, and I think with the implementation of various AI tools, we will be able to detect, you know, the behaviors of the hackers, so that we have stronger preventative measures other than to deal with the consequences thereafter.
We also need to deal with the victim, like rehabilitating that identity.
Yeah.
Because the victim is now in a space where that hacker might have biometrically signed up, and it might be the wrong face on the file, or you know, there's a whole bunch of other problems on how do you verify once there's been a breach that you clean up correctly. You know?
Right. And we have another question from this side.
Step out of my role as...
Are you cutting us off?
No, not at all, not at all. I love these conversations. I'm going to step out of my role as chair and become an audience member, because it gives me a different power base, right? So there's a lot of threads that are coming together, right? And I really need to ask the question because I see all of these various elements. So there's the effect of distribution of technology into everyone's hands, right? Everyone's holding a device that's an AI device, and they have all of this power now, decentralization, whatever you want to call it. You spoke about zero knowledge proofs, right? And that's a pretty profound and important thing, because it goes away from the literal identification of what's happening and then there's the piece around, but we tend to want to solve this as banks, as MNOs, and it brings on an incredible amount of risk, because the numbers are increasing, and even if you're up to 99.9%, that 0.01% is highly risky, and it'll ripple. So where I'm getting with all of this is, could you tell us a little bit, considering ID documents, considering this decentralization, a little bit of how the decentralization effect could happen? And I'm curious to hear what you have to say, if you have anything to say, about sovereign identity in that space, because it puts the identity with the consumer and not with the institutions. So ID numbers become a thing of the past, essentially, under the sovereign itself.
It just becomes an attribute, not the...
An attribute,
yeah.
So if you just want to give a couple of words on that, I'd really appreciate it, because I think it would tie everything in quite nicely between the various...
So a few people have tried it, and there's attempts currently going on in South Africa to get, sovereign identity on the blockchain going. when we started, we thought we would do the same. But the problem is that there's no standard and regulation in Europe. There's an identity standard that lots of providers can implement. And in South Africa, if I started a company now that says we will do a sovereign identity, what I would expect is a person walking down the street to go, oh wait, I'll KYC myself in case I want to buy a product in the next 3 months, and how long will it be valid? So that's not going to happen. You're not going to start from the consumer and then say, oh, I've got a database of people that have identity, so now the bank will have an incentive to participate. What would need to happen is that the banks would need to start, and the MNOs and all the regulated industries would need to start off by saying, we're all participating, we will onboard through this identity mechanism, so that when I want to get a bank account, I will then onboard myself, get my own identity. Because I don't think anywhere in the world it's been driven from the consumer side, because nobody here has the need for a digital identity until you want a product, right? So at the point of the product, it needs to be enforced. So, and I think for that you need regulation, because I mean, as much as the banks would probably want that, who gets to decide which standard, which, you need, and I would think that would be government.
Yeah. I think it's a bit of a conundrum, because the thing about it is, yes, because innovation is moving forward, but still we need to regulate it. And so this is again where we say, again, the chicken or the egg, what comes first? But I think, coming back to your point, to say it now comes back to the authorities and the regulators and the government to say, in as much as innovation is propelling forward, what are the things we're going to have in place so that we mitigate that innovation does not overtake what government has in place in terms of identification and all of that. But I think it's a conversation that probably we need to take forward to the 4IR Commission, because things are moving while people are discussing and negotiating policies. Innovation is not stopping. So it is a bit of a conundrum that I believe that it can be faced, but we just do need an engaging conversation with particularly the authorities.
And the banks are competing with each other. So the biggest bank would be the least likely to want to do it, right? Because they would bring the most identities to market that makes them easily portable. So it is sort of something that I understand why the bank wouldn't want to do it, but it's also best for the consumer. So at the end, that's the conundrum I think we're in.
One last question.
Yeah. So another thing to think about while we're also innovating is around, when we're busy thinking biometrics, facial recognition, even those, the way I've experienced this, pose different threats to the clients that we have. For example, there was a gentleman who got tied up and stolen his car, and they put the phone in front of him, and the biometrics then obviously opened his banking app, and they were able to transact. So I don't know how we combat all these innovations and still think about the safety of the client's money. And I think as an industry, that's the one thought that I had, that while we're innovating and we want speed for our clients, we still need to think about how that affects them, especially if their lives are threatened, for one. And then the second point that I wanted to raise is around us sending emails or SMSs or links to our clients. I always thought as an industry we were very careful how we pose our messages about that. And it seems that sometimes during innovation, then the ideas that come up to send links, because then it makes it quicker for clients. And I think as an industry, those are my two comments for us to take that forward, and for you guys to say what are your thoughts on what I've just said. Thank you.
I think that is one of probably the biggest, especially if biometrics is the only gate that basically hostage taking is the next step. And I think that's again where anomalous behaviors, if I don't normally withdraw large amounts of cash at night, then if we can detect that and stop that, then there wouldn't be, the criminals will learn. They learn and adapt very fast. They'll learn that doesn't work. But then it does require, and I think emotion detection and things like that has a bit of a far way to go to actually be accurate enough for that. But that is something that would be probably worth investing in. I don't know how you would do that with fingerprints if you
Right.
take a pulse that's too high. I mean, fingerprint readers take a pulse at the moment to do liveness detection, so an elevated pulse rate might be a warning sign.
Yeah, and I think it comes back to the convo we had earlier to say different layers of authentication.
Yeah.
And I think we have to check also with the crime rate, etc. So they have to be different layers of authentication. Any other question before we wrap up?
There was one, yeah.
One there? Okay. And then is the last one.
And for instance, with NetBank, I need my YubiKey as well. So if I don't have my device with me, then I could say, well, even with the face, you're probably still. Sorry.
All right. Oh, she's getting a mic.
Oh.
Good. Can I ask? Hi guys, Tina from NetBank. So perhaps one comment, and I always equate this a little bit to securing your home, right?
Yeah.
So you can do everything you want. At some point, you could be breached.
Yeah.
And for that, you have insurance, which is where you come in. And your comment regarding cyber insurance and why we also believe that that's a key thing going forward, to say all your physical assets are secured. Why not have your monetary assets secured? Because that is now really vulnerable. Okay? And because you know that you can't do everything. There will always be one step ahead, and there are cases where, as banking, we can do absolutely nothing. So I think that's where cyber really comes in, or the cyber insurance really comes in. My question on cyber insurance, because that's something we're really challenged on, is same equal to talking about your home security. If you leave your front door open, they will not pay you out. Okay? No. So we've got that challenge to say the practicality of cyber insurance and what the insurance companies are willing to cover is really only scenarios such as the one just mentioned. So therefore, the benefit to clients is quite small in terms of the scenarios available that the insurance company would look at. In your early discussions, what do you seem to find the conversations with the companies are?
So what we've picked up is that, again, is the thing of authentication, because before you take it on, you have to agree that these are the terms in terms of how you got to get the money lost, right? And so those are the things that we're also discussing with different organizations to say we have to have measures in place with regard to how we compensate the client at the end of the day, but then over and above what will be covered, because it's different. Again, it comes back to authentication, because somebody, if they were not you wouldn't know exactly the circumstance under which their money was taken. And coming to the scenario she was giving, it would look as if the individual gave consent. But again, tying it back to what Dirk was saying, to say we need to have detection measures in place so that we can see that at that point in time, it was a crime taking place and that the client has to be compensated. So it's very nuanced. There's no straight answer. And there's different things that we have to take into consideration before that being implemented. So it's very complex, and we're dealing with a lot of crime in South Africa where people are being kidnapped and their identity is being stolen. And in that regard, as Dirk was saying, if not a large amount is usually withdrawn, then it could raise an alarm, and those things are not fully in place as yet. So there's no straight answer, but there are things that we can work around to make sure that the client can be compensated in that regard.
But we're also finding insurance companies are struggling with this. At some point, the volumes get to a point where they're uncomfortable. In the beginning, it was, do you have these securities in place? Do you have these securities? How many penetration tests? But when the volumes get above a certain level, even if you tick all the yes boxes, they go like, and I don't have, we need to talk, because I'm also just shopping for more insurance from different places, because and we've never had a breach, we've never had a claim, but the numbers are just getting bigger and bigger, right? The volume is going up, and the insurance company gets uncomfortable.
Yeah. Thank you so much for such an engagement. Oh, you got one more?
Yeah, just one question. I think I heard the story about how to make everything secure, but I think, like you said, I think there are moments where, if I'm hacked, like a robbery's happened, or I'm in a car being hacked, and I've been shot in my leg, and they want 100,000 rands from me. And your system detects that's an unusual transaction. But I think in that moment in time, I might be happy to give them 100,000.
Yes.
So at least I can survive. So in that case, the question becomes, what is more important, the money?
Yeah.
So in that case, sometimes the system might work,
Yes.
Yes,
But I didn't want it to work that way.
for your life, yeah.
But the problem there is if, I'm sure you want to pay and we'd all pay,
To
whatever
live.
we have in our bank account for our lives. But if the systems from the beginning never allowed you to do it, the robber wouldn't expect you to do it.
Right.
They know the systems. Trust me, I mean, you'll see evidence now of how they know how the systems work. So the trick is to build a system where the robber is not enticed to do that, right? But probably then also enable you to override it if you're in that position. But if you can override it, then you're incentivizing them to force you to.
Yeah.
It's
And I think as we
maybe
wrap,
more psychology than
yes,
technology
it's
there.
true. And I was about to say that because, technology cannot replace the humans, but what we will do is provide systems that enable an environment whereby those things do not happen. But again, closing up our talk, it's mitigating risk with technology. We can mitigate the technology risk, but we cannot continually mitigate the human risk. And that's why we keep on innovating. And I do thank you. Right?
Yeah, thank you.
Thank you, Chair.